Good evening everyone and welcome to today's video on the GBPUSD pair. The GBPUSD pair continues to hover near its August 2021 highs, trading around the 1.38 level, as shifting global macros keep the US dollar under pressure. Persistent volatility in the greenback coupled with the renewed confidence in the sterling fundamentals has allowed the pair to consolidate at elevated levels rather than correct sharply. With the US Federal Reserve entering a policy pause phase, the investor focus is now decisively turning towards the upcoming policy signal from the Bank of England, which could determine whether this strength extends or stalls. Now coming to the fundamentals, US dollar sentiment remains fragile. Comments from the US Treasury Secretary ruling out direct dollar selling interventions and capital outflows, and whereas concerns around fiscal sustainability continue to weigh on the dollar, with Federal Reserve widely expected to keep interest rates unchanged, near-term support for the dollar from monetary policy differentials appears limited. And markets expect the Bank of England to hold its benchmark rate at 3.75% in the upcoming meeting. Unlike some global peers, the BoE faces renewed inflation risks, constraining its ability to pivot dovish. And furthermore, UK's CPI rose to 3.4% in December, highlighting sticky price dynamics. This keeps the BoE cautious and underpins sterling by delaying any meaningful easing cycle. Recent retail sales in England data suggest rising prices pressure on the consumer level, reinforcing the case for a prolonged restrictive stance from the BoE. Coming to the technical analysis, GBPUSD pair has broken out of a channel on the daily chart, confirming a bullish shift with strong move. However, with prices near 1.38 levels, a corrective pullback towards the breakout level support, which is right now to 1.36, is possible. Failure to hold this support level would invalidate this breakout, and the structure would fail and signal deeper downside risk for the GBPUSD pair. Now coming to the strategic recommendations, given the strong rally in GBPUSD and the rising probability of a near-term correction, GBP exporters may consider hedging at these current elevated levels. However, GBP importers may adopt a wait-and-watch approach, looking to resume hedging near consolidation zones in the GBP-INR pair, with scope for more aggressive hedging should the pair retrace towards its 200-day moving average, which is still quite far. So concluding today's video, GBPUSD remains fundamentally supported despite trading near multi-year highs. While short-term corrections are possible and profit taking, the broader outlook remains constructive as long as US dollar weakness persists and the Bank of England maintains a firm stance on the inflation. The upcoming BoE meeting is now the critical catalyst, with any hawkish undertone likely to reinforce sterling's leadership among all other major currencies. That's all for this video on the GBPUSD pair. Thank you for watching.